Hello, welcome. Good afternoon. Thank you for joining us today for the Family Office Insights Mercury Luminary Series. We've been actually having a lot of fun doing these. I want to thank you all for joining. Just a little background uh, and full disclosure, and also accolades. Family Office Insights and actually a couple other of our companies are customers of Mercury, and having the experience of being a customer, most notably because of the relationship that I have with Shelley, who's we've known for years, who's with Mercury and responsible for this partnership. Um, we have been able to have some really outstanding entrepreneurs to come on and talk to the Family Office Insights community with the intention, for the most part, there's some business development stuff that we've done for some of the companies, but primarily to raise capital for their ventures. And today we're super happy to have one of those guests today that you're going to learn more about shortly. So big thank you, Shelley. Thanks for organizing all this. And it's amazing. You don't get people posting things to say, man, I love Bank of America. But people post things all the time about Mercury. And we've done the same. Um, I won't give you the gory details, but I had a little faux pas with the bookkeeper yesterday, and it was instantly solved. So that just doesn't happen otherwise. So a little commercial there, full disclosure, user, love Mercury, and thanks for everything you're doing, Shelley. The context for today's webinars, we're going to talk about uh, a venture investing firm that invests in real estate, prop tech, and that sort of thing. And you're going to learn more about that. So just to be clear, the objective is to consider being an investor in this fund. And there's some interesting background and some credentials that you'll learn about as well. So we can't hear or see you, but we know you're there. You're welcome to put your um, questions in the chat or the Q&A, and we'll get to as many as possible. We have a bunch of folks coming on today. We're also going to be recording this and posting it for review. And also, if after you learn what you learned today, there are others in your world, your network, your colleagues that would be interested in learning about potentially investing in CREC, Creasy. How do you pronounce it?
So Arthur, thanks. It's Cressy.
Cressy.
We thought it when we named it. So crecer is Spanish to grow. Cressy is I grew up, and so that's where Cressy Ventures came from.
Wow, I thought it
It's
was commercial real estate, something.
well, it
Yeah.
just so happens Kismet as it is. We decided to focus in this prop tech world, and CRE is an acronym that everybody knows. So it worked out
Yeah,
well.
yeah, it worked out well. Just aside, Cressy means wine in Greek, so it's a little early, but we can start that at any time too. Um, so again, if there's anybody in your world that would benefit from hearing what you hear today, you're at liberty and feel free to connect directly, and we'll make sure we catalyze that to happen. So first, we're going to have Shelley talk about Mercury, and then go on to Ian here, who's full stack developer. And I'm not going to get your title right, but you're going to do your intro, Ian, and then with Jason. So, Shelley, thank you. Many thanks for you and Mercury, and please take it away.
Thanks,
Arthur,
Arthur.
yeah.
Also want to say thank you to my colleague on the call, Puya, who is
Oh,
our
good.
relationship manager. Yeah, Puya is
Hey, there
here.
you are. I just had to move it over, Puya. Thanks for being here.
Puya works with all of Mercury's emerging fund manager clients. And so Cressy Ventures is in his portfolio and is one of the many emerging fund managers that he is cultivating relationships with and providing opportunity to. So excited to have him on this call as well. I'll keep this short. Mercury is a banking platform serving startups, VCs, and the general venture ecosystem. I work within our high growth startup division. So we work with specifically post-Series A companies. And our goal is to redefine what it means to be a successful banking platform for people who are busy running their companies, running their funds, and don't have time to work with what is very much a full of friction experience for most folks. So this opportunity with Family Office Insights, and thanks to Arthur, is one of the things that we're doing to increase the value that we could provide to our portfolio companies, which includes founders who are building the next generation of innovative companies, as well as emerging fund managers who are building the next generation of funds that will invest in the next big thing. So we're super stoked. Also really happy to connect with anyone if you're interested in how to access Mercury's deal flow and get better relationships and insights with some of the incredible companies and fund managers that we get to see every day.
Great, excellent. Thank you. Ian, you want to go next?
Yes, I'd love to. Thank you for having us on the call. I'm Ian, as Arthur mentioned, background in software development, but I've been doing VC investing now for about a year, which has been an interesting change to move to the other side of the desk. But I also did a stint as an entrepreneur myself, which didn't succeed financially, but succeeded immensely personally, and I think has informed much of the decision making and the joy that I get out of venture investing. So yeah, I'll keep the background brief and let Jason take over from here.
Great, thank you.
Yeah, thank you so much, Ian. Ian's been a valuable addition to the team, and I'm not sure where we'd be without his expertise and insight. We're excited to have him as part of it. I'm Jason Fernandez. I'm the general partner and founder of Cressey Ventures. We've been doing this for a couple of years now, but we're really excited about the direction we're taking the fund and the companies that we're finding. I'll give a little bit of background on myself. I spent the last 6 years with Quake Capital as one of their managing partners here in the Austin office. Quake is a typical accelerator fund in the likes of YC and Techstars. Through my time at Quake, we made about 300 portfolio investments under the Quake banner, largely generalist fund to a fault. I think outside of downhole drilling for oil and gas or taking something through clinical trials, we looked at and invested in just about everything. But one of those things, one of the through lines to those investments that we saw loud and clear in our kind of decision to start Cressey was this access to and utilization of data trend, data democratization, regardless of vertical, whether, across the board, a company that understood its market and its competitors with real actionable insight did better, regardless of where they were playing. And we saw that as a nice through line and an opportunity to capitalize on some of our expertise in real estate investment, development, kind of management, and combine the two into kind of thesis behind Cressey Ventures. Happy to get started and talk about where we're going. So at Cressey, we're taking that data democratization trend and kind of our expertise in the real estate world, and we've built a bit of a real estate technology thesis. Digital transformation and utilization of technology across the capital stack and across the vertical within real estate, largely defined, is no longer a nice to have. We view it as table stakes in the market today. I think the current headwinds in the market across the board is the reason for that kind of thesis we've developed. It's no longer a free cash rate environment out there. Certain verticals are certainly challenged, and we believe technology is a lever that these real estate investors or developers or people that live in that world, it's a lever that they need to pull in order to kind of take advantage of increasing their returns within their portfolios. We've seen it across the board, and it's not just maximization of real estate asset value, but it's also operational efficiency and cost savings. And we are looking for founders that are kind of taking this data democratization and trend and this kind of what we believe are kind of the most transformative technologies in this world, and taking their time and building companies that are focused there. we're seeing some great ones, and we're excited to share that with you all today.
Jason,
So-
if it's okay, um, in the large corporate enterprise market, you used an interesting term, table stakes. The people are throwing money at cybersecurity because they have to, right? So it's
That's right.
basically, here's my line item. How big does it need to be? I'll try anything to keep the wolves from the door. Is there a similar type, I have to have this type op tech business in the real estate business, aside from sort of just maybe rental management or something like that? Is there something that everybody's scrambling to fix?
Well, I want to say yes, but I think there's just dozens of things that people are trying to scramble to fix, right? The real estate world in general is pretty expansive, right? It's managing your portfolio, finding the next kind of asset class or assets to invest in. It's property management itself. It's how do you buy and sell the assets that you're looking at with less friction. There's real opportunity for what we think is a sea change in opportunity for these people that are playing in this world. Real estate in general has been a vertical that's done things the way they've done it because they've always done it that way.
Yeah.
So I think this
They
I
still
think
write checks to pay bills. It's
there's
crazy.
there's a lot of paper. there's a lot there's a lot of things just being done because they don't have anything better to utilize. And there are some really smart founders that are coming into market today that are trying to pinpoint a specific kind of problem within that world that they like to play in and kind of throw some technology at it and really bring it into the 21st century.
Yeah, great. Thanks.
You're welcome. Yeah, so we'll go a little bit the background of kind of my involvement in the real estate world. My first fund effort in 2008, 2009 was a real estate investment vehicle. Actually focused in a specific location in the country. I'm a Miami, Florida native myself, and at the time, Miami was the epicenter of all that was wrong in the world of real estate. So there was a
Frothy comes to mind, right?
That's right. It was an interesting time to play, but we knew some asset investors that were interested in capitalizing on the market that wasn't quite where it should be at the time. And so we ran pretty hard and fast until the market came back to kind of par. And that was my first kind of real institutional effort in kind of the real estate investment world. Since then, I've been a real estate investor myself. I've worked with a number of family offices and real estate investment and development shops and kind of turning them around, getting them set for the next kind of stages of their growth. And a lot of that has colored kind of my view of the world from a venture perspective, where I've been living for the last 6 years specifically. So it's been fun. But
I bet.
but
You paused for a second, so you gave me an opportunity to ask another question. It's been my experience that real estate businesses enjoy cash flow, and they are different than in many ways, but one of the differences is that they always seem to have money, right? And whether it's from cash flowing investments, whether it's from all the goodies that come along from a tax perspective, investing in real estate, is that trend continued?
I think it certainly will, right? I think if you look at real estate in general, it's the largest store of wealth in our economy right now. I think it even eclipses kind of what we're spending in from a technology perspective. The average consumer, big real estate investors out there, there's a lot of capital available to them, and they're trying to deploy it in a way that makes sense from a capital return perspective, but also a cash flow perspective. They're tangible assets, right? These guys are sticks and bricks people, not necessarily zeros and ones. And so trying to find a way to marry what people look like from a value perspective, from a typical real estate investment thesis with a technology enablement platform is a trend that we see is only going to grow over the next couple, life cycles throughout. I think it's not going to abate anytime soon.
Yeah, makes sense. Thank you.
You're very welcome. We've been playing in the real estate world for a while, but my sojourn into kind of venture investing was largely started from my time in an investment banking world and the private equity endeavors and through those family offices. But my time with Quake really got us an opportunity to look at and work with founders on the early stage. And so we like founders that are really coming up with the next thing, right? We like to find them early, and we like to find founders that are very kind of interested in what they're looking at in the world. We'll talk a little bit about kind of what we're looking at in those founders. We like founders that kind of champion a team first attitude. If they were part of a team, they were in sports, they were in a band, they had people that relied on them to succeed. Where the rising tide lifts all boats mantra is part of their DNA. I think that's the way we will look at the world too. I think it's you can certainly get there by yourself, but it's a whole lot better if you can get there with others. There's a nice kind of portfolio theory in finding a team to help you get there. And also in those founders and those companies, we're looking for companies that have traction. We call it a post-market inflection point. It's a better way of saying that a company's made mistakes in its past and learned from them. So we want companies that are in market making money. Our founders have revenue to work with. Our founders have customers that they're trying to kind of better understand and find more of. And that's where we can come in as investors and take our experience and our knowledge and really help them get more traction in that market. That's something that we spend a lot of time thinking about in our portfolio. We're also looking at the data democratization trend, right? There has to be real actionable insight in the information that these companies are utilizing to build their businesses. It can't just be a hunch. There has to be kind of a directional authority based on the information that they've gathered in building the businesses that helps guide where they're going over their next 2 to 10 steps. We like that kind of that meld of those 3 kind of tenets in our investment underwriting thesis.
So all of these are post-revenue demonstrated, way beyond MVP.
That's right.
Even though it's a venture fund, this is more like round A type stuff.
Well, we call it seed plus.
Yeah.
We spent a lot of time in the pre-seed world at Quake Capital, where we found companies that were still in ideation phase, that had a direction they wanted to go, they had an idea, but they were trying to put dollars and cents behind that kind of thesis that they were putting together. Where we're trying to invest is in founders and companies that have already figured out how to bring capital in the door. And we want to help them expand that, right? And in so much that we are pretty involved investors, right? Outside of looking for a board seat or board advisory position at a minimum, we will roll up our sleeves and get involved. I think our founders spend a lot of time with us. I think at the moment, given our portfolio at Cressey is still relatively small, our founders get a day a week with us, whether they want it or not. So we spend a lot of time helping and poking and prodding and making sure that the decisions those founders are making are kind of putting them in the right spot.
Got it.
All right. So, I think everybody here understands why venture is an important piece of typical portfolio theory. We really like this earlier stage of the venture market that we play in. We understand where our investment goes. The companies are still growing, and we can help kind of dictate and guide where those investment dollars are used in the building of that business. And we do like the returns that early stage investments can present to a portfolio manager or somebody investing in a space. There's been a trend for decades now of funds getting larger. And as funds get larger, their investments getting larger. And unfortunately, over the last decade or so, there's been a higher and higher kind of cap rate environment these companies are investing in. So those bigger check sizes at higher valuations lead to ownership being the name of the game in venture, lead to kind of much bigger necessary exits to realize value from an investment perspective. If you're investing in later and later rounds, we think there's opportunity outside of unicorns. Trust me, everybody loves them, but opportunities, call it sub $500 million exits, are out there for the taking and really move the needle from an alpha perspective. when you're investing early enough. And so that's why we like to spend our time in this kind of seed plus Series A world. So venture investment today, well, one of the benefits of kind of the interesting market that we're living in is that we don't have to have valuation conversations that are difficult anymore, right? Valuations that we're looking at investing in our businesses are largely dependent and based on real revenue. You know, financial statements matter. And we, you know, early in our diligence cycle, we take a look at everybody's QuickBooks. We look at those finances because they're important and they help us understand where kind of the weaknesses or the strengths within a business lie. So we spend a lot of time diving into the numbers. So that's pretty important from our perspective.
Yeah, it's nice to have something to apply a multiple to. Right?
It really is. You know, I think it's no longer aspirational pricing from a valuation perspective, right? It's based in reality. And, you know, that's one of the things about the market they're in right now is kind of, it's a bit of a pendulum swing. We're on the other side of it now, and we're happy to be there. All right. So we went a little bit through my background and Ian's. We have a couple other people on the Cressey team. We've got Tara Jordan, who's part of our investor relations team down in South Florida. Tara comes from a family office background herself. She has a fantastic Rolodex, and she's been a part of both the effort at Quake Capital and joined us here now at Cressey. Glenn Argenbride is a founder and general partner of Quake Capital. Glenn has been incredibly supportive in the effort to spin out Cressey from the Quake family of funds. We like to call it a sister fund, but unrelated. Glenn has provided a lot of insight, a lot of introductions, and has been a great champion of ours as we spun this up. And he's been a nice strategic advisor on the team. He's always a good person to call. And
it's always nice to get the vote of confidence from people that you grew with, right?
It is. You know, Glenn and I have spent a lot of time together. When I initially joined Quake and through our heyday, we were a team of almost 40 people. But at Quake, in-person accelerators fell out of favor for a couple of years. And so the typical bring the founders into classes in regional markets. We had offices in New York, LA, Seattle, and Austin. You know, the curriculum that we put together for those founders, those 3 months that they would essentially live with us in our offices, we couldn't do that for a couple of years. So Quake has morphed more into a typical investment fund, and it largely kind of that team of 40 turned into 3. And so we built a nice kind of seamless platform that kind of runs itself right now, and Quake is happy to be in a bit of a harvest mode for its portfolio companies right now.
Yeah, that's nice. It was largely for COVID.
COVID was the reasoning, right? It was just hard to continue with the model that Quake was currently championing. We wanted to provide as much value to the founders that we were investing in, and as you know that we were typically doing within our investments, and not being able to bring them into our orbit for a period of time just kind of changed that model a bit, and so we moved on from that accelerator kind of track.
Changed everything for a lot of people. It's crazy. Can you imagine in our lifetime we lived through COVID? Jeez. It was surreal.
It was pretty surreal. I have to say, I'm done with Black Swan events. If I could live without another one, that would be great.
Yeah.
But yeah, no, it was it definitely kind of it separated the wheat from the chaff. Quake is still alive and kicking and doing very well. But yeah, there's been a lot of change in market and in industry. So we've learned a lot.
For sure.
Well, so I guess I can talk about a couple of the areas of prop tech that we're kind of trying to focus our investment thesis on. And granted, these are not kind of exclusive or all encompassing. These are just some places we've seen more and more companies pop up on our radar screen that are really moving the needle in their respective markets. The first is typical real estate investment and development, understanding what you want to build, where you want to build it, and why. Kind of information behind those decisions is really important. And it blends well with kind of this real estate investment, real estate data thesis, this data democratization that we're trend that we're seeing within our businesses is really those two are kind of part and parcel to one another. One of the reasons that we really are focused in here is outside of kind of the opportunity in market is that we are, as a fund, resonating well with the real estate investment and development shops. We represent opportunities to bring companies to their portfolios that can be immediately accretive. And their investment in Cressey, their use of our portfolio companies increases the alpha of their investment in Cressey itself. It's a nice virtuous cycle that we're seeing develop with those partners. And plus they have a lot of information that they're willing to share, a lot of pain points that they're trying to solve on a daily basis. And understanding those and continuing to build on that understanding, we can present them companies that help them solve those issues that they're dealing with daily. So we're spending a lot of time there. Now, where we're seeing a number of companies, and we've seen this forever, is construction tech. It's a little bit harder to invest in from a kind of call it a construction tech asset perspective, though we think those are kind of outside of our purview from a venture investment. They require a lot of capital to do production runs and kind of figure out what the next type of timber or kind of how you print a house might be. But we think there's some real technology behind there, just kind of understanding the zeros and ones in what is being built. That is pretty interesting. And then we've got real estate operations itself. How do you manage your portfolio, right? How do you understand where those cash flows are coming from? How do you understand where you're developing your next kind of expertise or investment thesis and where you want to spend some time kind of investing? There's a lot of information there. And then to continue that one step further, on the data democratization trend, we've got permitting and regulation. There's a lot. This is where paper comes into play, Arthur. A lot of paper and a lot of information that is stored in silos and is very difficult to access. What we're seeing in market with kind of information becoming more and more readily available, there's a real opportunity for people in the real estate and kind of built world to understand what they're building and why, and then how to get it through the system in a more efficient manner without the paper.
So it's going to be a real revealing, this question, but a lot of the, depending on what section of the real estate market you're operating in, there's still a lot of human gatekeeping that goes on with townships and cities and all that kind of stuff. And it's, people keeping their hands around their cookies and making sure they keep their job. I mean, just to call it what it is, right?
Right.
Is there hope for, or to sort of making that more efficient, or is it just human nature that the people who are keeping, the apron strings around that to make sure that the township doesn't turn into something that they don't want it to turn into? Is there hope for that?
I think absolutely. I think those people that want to protect the cookies in the cookie jar, that want to keep their roles in their kind of existing form, are going to have to start adopting technology into their day-to-day, right? I think the ability to keep that information siloed and protected in their own ecosystems, it's just getting harder and harder. And people are clamoring for more information and for more data. And those that aren't willing to kind of provide it or find a way to do so are probably going to be left behind. So but I will say, municipalities are a slow moving train. It's going to take a while for those things to kind of matriculate to a point where they match kind of what we're seeing in the technology revolution kind of within kind of digital world today. But it's coming, whether they want it to or not.
Yeah, again, it's personal experience, but it's just like going to court, right? There's all these people feeding at the trough, and they don't want that disrupted because that's their livelihood. And so you got to bring the engineer in, the architect in, the whole thing. And there's a lot of people with their hands in the cookie jar. Let's call it that way. Anyways, I just, I hope for that.
I mean, if it will happen, Arthur. It's just going to take some time, but when it does, it's going to be a sea change, right? The people that have to work within those ecosystems are just they're no longer going to accept the way things have always been done, right? Digitization is here. Opportunities to do things, in kind of a 0 and 1 world, and not, pen and paper. It's happening, and it's happening quickly.
Yeah, sounds lucrative too.
We hope so. We
Yeah.
we sure we surely we think so. We're making a big bet on it.
Yeah.
All right. Well, I can go into a little bit about Cressey itself. We're raising let me go to this page. Yeah, we're raising a $25 million fund. We're targeting our first close within this next quarter. We're danger close to kind of doing that. And if a few things go our way, we'll be well on our way to kind of that first close kind of sooner than kind of middle or end of Q3. We have, warehoused a few deals right now, and we're very excited about those deals, and we'll talk about those in a second. But our typical, targeted investment amount once we're post that first close is, a 3-year investment cycle. We're going to try to invest that 25 within, the first 3 years. We are going to be reserving capital to double down on our big winners, like any typical fund, and our terms are absolutely market. 2 and 20, 8% hurdle. And we are offering direct access to our investments for follow on or for co-investment for our partners.
Is it drawdown or committed?
Drawdown.
Yeah.
And so we have some great partners. Actually, it's something I'd love to highlight, outside of our kind of administrators and our banking partners, and we need to put Mercury on here, Shelley. Is that Wilson Sonsini is our kind of legal counsel, and they've been really wonderful to work with. And as of last month, they're an investor in Cressey itself. So we're happy to have them on board.
That's exciting. They're just notoriously being able to pick out the winners. So good for you. Yeah.
Yeah. We're excited to have them, kind of champions of ours, and they've been great partners. So we're as far as terms go for the fund, we are typical. We're excited to have people join us, and we're looking forward to kind of really putting some gas to the pedal on the Cressey effort. We've got a pretty substantial deal pipeline that we are excited about. That's growing every day. Ian can attest. He's a busy guy these days.
Doing the underwriting, are you, Ian?
Uh-oh. Here we are. Okay. I guess it's a good chance to talk about our first few investments under the platform. So our first investment is a company here in Austin, Texas, called Plottr. Plottr is a data intelligence platform. They help you understand X marks the spot on what do you want to build and where you want to build it. They found a really kind of substantial market for their information and their platform within real estate development investment shops, and also in kind of the big franchisors out there. If you're tasked with putting 250 new franchises on the ground in the continental United States within the next calendar year, you can't afford to have a miss. And they help you understand where the right one is with actionable insight and intelligence that we think is better than the kind of existing players out there. We met Plottr and their founder, Peyton Truitt, early in their life cycle. They were a little too early for us to invest. But we also knew a company out there, call it a competitive business, that is also here in Austin that needed some capital infusion. And we ended up putting those two businesses together. We helped Plottr buy that existing business called IdealSpot, and now the combined entity has a tech stack that we think is unparalleled in the market today. The Plottr's competitors out there are able to give you some actionable insight from a data intelligence world, but it's usually stale. Plottr's is to the minute, to the day, and they can help you ingest your own information into kind of that specific view of the world that you're trying to build. We found them a couple of large private equity partners in the franchise world, and they're currently rolling Plottr and their platform out through all of their companies. We're excited about where that one's going.
Yeah, so I don't mind putting this on the record, but talk to me about that post-webinar, because we have a very large private equity company that is in the franchise business. And they're good friends. So we might be able to help them with at least a customer.
Oh, that's fantastic. I think the Peyton, the founder, can attest. We will play account executive and BDR when necessary, and so we roll up our sleeves. So we're happy to make that introduction. That'd be fantastic.
Yeah, for sure.
Thank you for that. Let's see, our next investment. This is an interesting one, and it's kind of in the financing of the real estate world, largely in single family office kind of verticals. Nada is an opportunity is a differentiator in to the typical home equity line of credit. It's an HEI product, so it's not a loan that a single family homeowner will secure through Nada, but it is actually an equity investment in their home that kind of divorces that homeowner from the typical kind of process that they have to go through in order to get a second mortgage.
I've
So
seen this. It's super cool.
it
Like
is
it's ripe for nefarious players, but if you got somebody that really is not trying to be usury, and I don't mean to focus on the negative, but this is super cool because there's no corresponding payment, right?
That's right. There's no corresponding payment. The homeowner can pay it off when they can. They're in it until they do, and it's a real kind of opportunity for people that can't usually qualify to access the existing value within their homes. It gives them a chance to do so, and it's we think it's going to be a fantastic platform, and it's a founder that really leans away from the negative. He's a team player at heart. John is a fantastic founder. He's incredibly driven. He was in a band for a number of years, so he had people relying on him for a host of things outside of driving the truck or the van. But yeah, we're excited about where this one is going. I think they've just recently announced in market that they have a large warehouse facility in partnership with Texas Capital Bank. I think it's to the tune of $100 million off balance sheet financing. And we think that's a fantastic vote of confidence from a pretty well-respected banking institution here in Central Texas.
Yeah, I don't want to get into the weeds, but I'm super curious about how they deal source. Is it advertising?
There's a lot of advertising. They're kind of out there in market in a number of different platforms, and I think they've brought on as their new chairman of the board a gentleman named Tor Steen, who was the CEO and founder of CrowdStreet. And through Tor's background and his connections, we're excited to see where Nada's going to go over the next few cycles.
Very cool.
Yeah, so we like that one a lot. Nada's up in Dallas as well. So those are our two Texas investments right now. Our third is a company called Lease Up, and that's in Boston, not Austin. But we like this founder nonetheless. Kurt, their founder, has got some great experience in the commercial real estate brokerage world, right? He lived in that space for a long time. And when we looked at the platform, both mine and Ian's big question was, why hasn't this been built before? It's basically a broker enablement tool. Commercial real estate, when it's sold, there's big, thick glossies that end up having to be printed and shared around the boardroom. And, they have to be mailed to the counterparts and they have to be dissected and sent back. And it's just a lot of paper. Kurt has found a way to build something that all of the big players have been trying to build on their own for years. And one of the best parts in our initial introduction to Kurt is he asked us to sit in the background on a couple of sales calls to whoever we wanted to introduce him to. So we introduced him to some market presidents here in Austin and Dallas, and Kurt sold every single one of them. It was fun to watch and really kind of gave us some insight into what he's building and how needed it is in market. So we're excited to see where this one could go. And from a data perspective, there's a lot of information flowing around those thick and glossy kind of information kind of packets that are being sent out. And Kurt's really great at curating and understanding what's behind there. So we're excited from a data play what that could become.
So commercial office space lease.
Office spaces, leases, purchases, sales, divestitures, you name it. This is a platform that those brokers can utilize. It's a cost savings, it's a time savings, and it's a better information flow inside the business that they're trying to capitalize on themselves.
Very cool.
So those are our first three. We've got a pretty substantial deal pipeline. We've got some great partners and follow-on investors that we've worked at with Quake, and we will be continuing to do so here at Cressey. Quake's performance is pretty intriguing. And one of the benefits that we have at Quake is there's, call it 24, maybe three, what we would call prop tech businesses within the Quake family of portfolio companies right now. We know them intimately well. We are actively in conversations with investments within a few of them right now, and hopefully more. And one of the benefits that Cressey has is we get access to Quake's follow-on rights. We've found it in market today already. We've proved out the thesis, and those founders are happy to have the continuity of investor. I've been part of their family, for a long time right now, and they're happy to have me on the cap table under another banner as well. So we're excited at what that opportunity both presents from a companies to look at perspective, but also from a valuation perspective when we get in there and kind of can take advantage of some follow-on rights that Quake may not be taking advantage of.
And since there's so many, obviously you don't want to get into any specific one, but the same idea, same thesis.
That's exactly right. Information, data intelligence, prop tech world at large. I think there's a handful right now that we're in kind of final conversations with that are doing fantastic things in market. I can certainly name a few if you like. We've got Automotus, WIL. Please assist me. There's more than a few out there that we're in kind of advanced conversations with right now.
There's been a couple folks that have been trying to, I'm wondering whether this fits or whether you have just an opinion about it, trying to put the electric chargers into the apartment garages. That's probably too CapEx intensive for your thesis, right?
I think that's correct, right? There's big production runs that go into building those businesses and helping their expand their footprint, and that's pretty difficult to fund from a venture perspective where we play. We think that's kind of better suited for those later stage rounds where the round sizes are much larger and they can kind of plan out those.
Or debt, right? Or debt.
Or debt, right?
Yeah.
Yeah, we're excited about what we're doing here, and happy to answer any questions or from the crowd, and thank you for giving us the time to talk about ourselves.
Thank you for doing this. Super helpful. I noticed a bunch of companies that we know on your, not that company. I wouldn't know any of those. I mean, all those were new to me, but like Carta and so forth. Out here in Salt Lake. Yeah.
We're big fans of the Carta team. We were early adopters under the Quake banner, and we're happy to have them kind of part of the effort here today.
Such a hard business. You
really
got to them for doing that. So how there's 250,000 minimum, there's maybe 10 or 15 left, something like that.
Yeah, probably about that. We're certainly not going to kind of shy away from any new investor conversations, but we do have some interest right now, and we're kind of off to the races.
So what's the current investor profile look like? Is it, angels? Is it family office? Is it institutional? What's it look like? We don't need to know specifically who it is, just profile.
Yeah, we're largely high net worth and multifamily office kind of investors right now. Those kind of looking for another vertical to spend some time in thinking about within kind of the venture world. We've had some great conversations and advanced ones with kind of larger investor partners that are real estate investors themselves. So the development shops and the real estate investment shops that are looking to find a way to access technology coming into market within their portfolios, and we can help them kind of bring that to bear. And it's nice. We're helping them solve problems, and you're providing capital for us to do it for them. So
yeah, well, so we're really, and thank you, Shelley, because this, there's so many people that are interested in real estate because it's such a huge asset class, and it's less amorphous than many other things, right? So we're super appreciative for you to serve these fine gentlemen up here, and Tara, lady, didn't mean to be sexist. and share this with everybody. And so thanks for doing that.
Yeah, it's our pleasure.
Yeah,
Thank you, Shelley. Thank you, Arthur.
you're
Thank you,
very welcome.
Pooja.
Yeah, we're
Pooja
going to
brought
make
you all
sure.
together for dinner and invited me, and that's how we made this happen.
Yeah, that's awesome. Well, you're all welcome to Park City. We got plenty of room. Shelley knows that. It's just so beautiful out here. So we're going to make sure everybody gets in touch with you, all the RSVPs, and then we'll have the recording, and hopefully we'll be able to post that if it's okay with you, and
Absolutely.
share it with everybody, the wider audience as well, because I think they'll be keen in learning more for sure. So, Ian, thank you. Shelley, as always, really appreciate it. And Jason, nicely done. Thanks for doing this. And we'll make sure we do all the follow-up on our end. And thank you, everybody, for joining us today. Shelley, can you close it up? And then, oh, hold on, wait a minute. We got a flag here. Let's see.
Yeah. Yeah, we'll get you a copy of the presentation, Miko.
Okay, thank you. You can see it. And then, yeah, I just wanted to give Mercury the last word. Is that all right?
Yeah, I'll make it super short. We'll follow up with Cressy Ventures information, all the ways to contact them. From there on, it'll be up to you and Cressy to continue that relationship, and hopefully it's fruitful. Again, please reach out to myself, and we'll have the email in the follow-up as well, or Pooja, if you're also interested in learning more about the types of companies and fund managers that Mercury is banking and supporting. And if you want to be involved either in a more active way, or if you just want to be the recipient, part of our network, to receive more targeted opportunities that we have available for you. And I also want to just thank Arthur for once again making this partnership happen. This is our second our second launch of this. We had 3 companies last year, and so this is the second time that we're doing this, and we very much appreciate it.
Yeah, we look forward to doing more. And if you have any money in the bank, you should move it over to Mercury because it's so easy. And it also is super conducive to emerging managers and funds and entrepreneurs and startups and so on. So that's my commercial. So again, thank you all for sharing. The only thing you can't make more of, and that's your time. Till next time. Thanks, everybody. Take care.
Bye.
Thank you.